Alright traders, yeah, this finally we got some selling coming through on the Kiwi dollar. After the elections, it was pretty clear that there's going to be some negative announcements coming up relatively soon. Now what we've seen here is that today we got the announcement from Labor that they're looking to review the mandate for the Reserve Bank of New Zealand. Now this is very important because this is taking away central bank independence. This is leading the RBNZ down a path of keeping the Kiwi dollar lower, keeping rates lower for longer. And the divergence between that and the RBA will become clear if we get inflation, because inflation no longer being the mandate of the RBNZ will mean that the Aussie dollar can start to rally sharply, whereas the Kiwi will be left behind. And that really leads into selling Kiwi against nearly everything. And it could get messy. It could get messy in terms of downside potential here. We've got some support down towards 68, 60. Below that, there's a bit of daylight, right? And so if they're going to sell aggressively, you can, Kiwi is one of those currencies where they do sell aggressively because it's relatively easy to push around. And you got this subdued backdrop where only profit taking is really going to slow it down. You got some profit taking towards 70 cents before the announcements from Labor, but the announcement also came out that they're going to ban foreign buyers from buying existing homes. That's also quite negative in the short term for the amount of inflows coming into New Zealand. So they're really sort of taking this isolationist approach, quite quickly, and more announcements like this will just feed the negativity. And definitely, if you break to the downside in an environment where the US dollar is quite strong, it's going to be harder and harder for the Kiwi to come up for air. So you've got to be aware of that. Now, the other way to play it is just straight up long Aussie Kiwi. That means you have to contend with the Aussie, and the Aussie has the CPI numbers. CPI is most important number probably for the Australian dollar right now. It's only a quarterly figure and it comes out tomorrow. Now it's forecast to be hot as just like some of the other CPIs around the world. And the New Zealand CPI, it's forecast at 0.8 quarter on quarter, which is well above the 3% yearly annualized rate. But it's it could be just due to a few factors in the short-term drop-off from the last year, rather than this is the start of some sort of wave of inflation. Core CPI isn't expected to be that strong, just 0.2. That's coming out tomorrow, and that's probably the big event for tomorrow, apart from the Bank of Canada. We'll be talking before the Bank of Canada anyway, but also, yeah, I suppose the preliminary GDP from the UK could be interesting, given that there is a little bit of focus on how the UK is faring in these Brexit woes. Weaker numbers like that open up the door to a little bit downside. 0.3 is not very strong to begin with. And the pound is suffering from lack of good news. So no good news means the pound struggles. We get some good news eventually on the Brexit negotiations, the pound surges. So you have to be patient. You have to be patient. Probably post weekend, it's not really there. There's nothing there to help you. So the selling of the euro pound a bit premature. Might get stopped out here if it continues to underwhelm. There seems to be still a lot of brinkmanship in terms of where the pound's going to go next. Where's Brexit negotiations going to go? In terms of dollar yen, I'm going to close this dollar yen out because the US stock markets closed on the lows for the first time in a long time. So basically, the selling came through, and then there was a little bit of a relief rally, and then the selling came through and we closed on the low. That we haven't seen that for a long time. Now, I don't mean to say that definitely stocks are over, but there's a chance, right? There's a chance now, and the market's been pretty strong since then. But today is really important for the US stock market, and that's really important for the dollar yen. Really important for just general risk on, risk off appetite. And if you're looking for ways that the euro can rally, a strong sell-off in the stock market with dollar yen going lower is the way. That's the way that you really trick up the market at this point, which has become accustomed to the ECB being taper for longer and maybe not so aggressive on buying. Something like a short-term correction in stocks is something different, and short-term is the main focus in the market when that is in the midst of happening. I did buy dollar yen. I've been buying dollar yen every dip. That's been working out quite well, but if it continues to fall, I won't buy the next dip, right? I won't buy the next dip at all. You don't keep on trying your luck. It's not like this is cheaper. Right, this is weaker. If you start to break lower lows, you start to make lower lows, then that's a bad sign. So maybe 113 if price action's okay. Stocks reverse from whatever, I don't know, say we go new lows today and then stocks finish quite strong, then I might be able to buy on any sort of reversal here, but it's not really my favorite way of playing. I'll be a bit more very cautious in the next leg down, just because stocks have so much room to move if they do turn, and I'm very worried of that being a reality. Aussie dollar's grinding low, dragged down a little bit by the Kiwi, but mostly just that feeling that we are going to test lower, that 77.50 level again. If we break that, then you got the 70, you got the 200-day moving average coming through at 77.06. So that's next level below that. That's a pretty big sort of level as well in terms of technicals. If you bounce off the 200-day and we go back above that key level, that's sort of a buy signal short term. So but we're going into a day where we got that CPI number and the expectations are so strong. I don't know how you're going to beat it. I don't know how you're going to beat 0.8. We'll see tomorrow, but that's a really hot number anyway. So if it does beat it, then focus will shift maybe to the RBA and what its timeline really is. That jobs data has been really strong out of Australia. The only thing holding us back really is our CPI numbers. If they do start to kick up, then you've got that opportunity here for bringing forward, whether it's right or wrong, where the RBA will say that no, we're not raising rates, which they probably will. The market is king, bonds are king, and bonds start to price in rate hikes early first half next year. That's a really bullish reality, and that really reinforces a long Aussie Kiwi if that was to happen. That seems to be the favourite way of playing any sort of change in expectations for the RBA, because RBNZ's not going to do anything if they're talking about changing their mandate, right? That's another reason to stand still if you're a central banker. So yeah, tomorrow we're going to go change our attention straight to the Bank of Canada, and then the day after we're going to go looking at the ECB. ECB is still not having an effect on the euro, so I think it's really going to be a non-event. But it could be interesting just to see the market's reaction either way. Given that we don't expect the downside, if the market could somehow rally afterwards, that's a bullish sign. That's a good sign. If the market goes down, then we're looking for what happens at the big levels, 1680, 116.80, 116.20, and if really things go crazy, then 115 is potential as well. There is chances of a big pullback, and that will really affect all the pairs if that was to be the case. If the euro is going to 115, dollar yen's going to 115. Yeah, that's just pretty much the way it is, as long as stocks hold up. And if euro is falling because lower for longer is taken as ECB's in limbo for a long time, then you've got the DAX probably going to rally, break fresh highs on that news. Okay, so in terms of data and every pair in play, nearly every pair is in play, broadly coming up. Dollar yen by the stocks, euro by the ECB, pound by the GDP, Aussie by the CPI, Kiwi by just sell it anytime you get a chance. Dollar CAD by the Bank of Canada as well. I mean, it is a sick puppy too. But I don't know. I mean, I'm not really trusting the dollar CAD rally, right? I still remember how heavy the selling was, led by Bank of Canada hawkishness. So going into a Bank of Canada event, I'm not really keen to play. Bank of Canada's going to be dovish. They might still show concern about Canadian dollar, but if they show intent to still keep raising rates in the short term, then perhaps regardless of what they talk about the Canadian dollar, then you still might see that Canadian dollar do a whip, or I mean, there's better currencies to be selling than the Canadian dollar. Unless you're super bearish on oil, which you shouldn't be, then selling of the Canadian dollar is not really the game. There's just, you could sell Aussie or you could sell Kiwi with much more enthusiasm, much more belief. Yeah, so, and also, I mean, look, if there is some sort of reaction or good news in the pound, then you have to ask yourself how you're going to buy the pound. Buying a pound against the euro is my way. Buying a pound against the yen makes sense if stock's okay. Buying a pound against the Kiwi makes a lot of sense. Pound Kiwi really looks to me to be the the one that's breaking higher, it's got that support and it's got that room to move. So pound Kiwi could be a 1,000-point rally. Yeah, the Kiwi, obviously when it turns you got to respect it. Alright, but let's see the Kiwi back above our 70 cents before we get excited. In the short term, yeah, it can get wrecked, and it has in the past get wrecked. And this change in RBNZ potentiality is a huge story in my opinion. 300 or 400 points, 500 points worth of selling can come from that. So yeah, don't be underestimating government interfering with the central bank and how the global markets can play that. Global markets don't like that. You can't just get into power and say we're going to make the Kiwi lower. That's just not cricket. So the CPI number tomorrow. Let's have a little look here. Our TD reckons it's going to be just 0.5%. That's pretty much a lot lower. So the target for the RBA is 2 to 3%. They're looking for some pretty strong trim mean. So they're looking for, currently we're not priced in for a rate hike until October 2018. So that can change pretty dramatically, right? When you have a flat outlook, a neutral outlook, which are 1 year till the next rate hike is, then the change in that is sort of like, remember what happened with dollar CAD? The change in that can drive a multi-month rally. And definitely against something like the Kiwi can really get a kick in. This 2 year is getting a lot of attention in the world, in the market as well. The grind back here is important because 2.4 is shown to be the key level everyone's watching in the bond market anyway. If that breaks higher, then dollar yen breaks higher. So just keep an eye on it. It's all the way back up now in the start of Europe. So this is more important than what we feel about stocks. If this rallies, dollar yen rallies. Should have looked at that trade first. Should have looked at that chart first. See if we missed anything here in terms of PMA transition to be agreed with Brexit trade deal. So here's the actual words. We focus on sustainable economic development, supporting regional economies, increasing exports, lifting wages. Review and reform it. This is the dangerous part. How they do it. You know, while there's still questions about how they do it, let's just sell Kiwi. So November 2nd's not that far away, guys. Yeah, MPC's coming up real quick. We're talking 8 trading days away now. Pound has definitely got that potential to raise rates, and I suppose the GDP is the last piece of data. So that GDP might become more important tomorrow. I honestly didn't know the date of when the I knew it was November, right? But I didn't know it was November 2nd. That's that makes it all of a sudden it's on now. It gets into traders' thoughts very quickly later this week. So yeah, pounds in play. Deutsche Bank is talking about the Fed. I think it's going to be power, right? It's just always power. I can't think they'd just be mad if it wasn't power. It'd be crazy for volatility. I don't think the market's going to react if it's power. I don't think you got too much premium on Taylor right now. I mean, it does support, I suppose, just a little bit of risk on because you got that out of the way. You could get this answer really quickly. You could get this answer. He's going to give the answer before he travels to Asia, which could be interesting. Meeting China, meeting Japan. Talking about North Korea, of course. Maybe North Korea's got a little present for him. So 3 hikes in 2018 power. Equities to rally. US dollar weakens slightly, maybe. Yeah, let's just not even consider these guys. Unless he's trying to surprise us, it wouldn't be the case. Haha, beware the short. Yeah, I don't know, guys. Beware the long. I mean, look, I'm all for buying the Kiwi once we have a little bit more clarity on how they're going to change the RBNZ, what their new economic policies are, that the market digested, perhaps get a US dollar weakness situation for whatever reason, euro-led, pound-led, you know, US dollar, Fed-led, but don't go looking for trouble when you know the market's showing such negative price action, and the support is still 50 points away. Okay, if you buy down at 68.80 or 68.60, yeah, you've got a chance of making money. But how big's the rally going to be from there is the question. What's the risk reward? Where's your stop? Anytime you try to play bottoms in the currency market, you have a chance of getting pantsed. It's and the Kiwi is one for taking you out. If you remember this sell-off when they intervened in the currency here, it didn't stop. You never got out. Yeah. I mean, we could make a value play on the Kiwi if it gets towards 63, 62. And we're still 6 cents away from that. So I don't think there's any rush into a long Kiwi dollar. Easily next year you could see a scenario where the US has got a higher interest rate than the Kiwi. So yeah, there's too many variables that are potentially very negative, and the short-term moves are very negative. Look, when Kiwi settles down, it's a silent assassin. Yeah, it can turn euro Kiwi, pound Kiwi can roll down, and then you get that nice little sell-off that you always get, sort of thing. Many euro Kiwi sell-offs, but I don't know. Looking for that sort of grind low is not my game at the moment. How high do we have to get here? Pretty high. We've got a bit of room here. Well, let's see what happens when the Kiwi's down at 68, 60, if it gets there. But that seems pretty open, pretty strong chance. Well, if that becomes market thinking, the RCDP, then yeah, you are talking about long Kiwi. Okay, but you don't play what you feel, you play what the game the market's playing. Yeah, so eventually that might become reality. Right? That might become reality that you're buying Kiwi dollar because of the RBNZ being hawkish. But right now you got no, you just got your views on what's going to happen medium term. Yeah, and so short term, the carnage can get real and get real quick. And this is the Kiwi we're talking about. It's the most aggressive sort of volatile pair out there. when it pushes through levels, it kicks. It's a bit, I mean, it's not even oversold really. It's just, it's had a big move, but it's by no means, look, if they can't get it past, if they review it and they don't actually change anything, that's a super strong thing. If Peters doesn't end up being the boogeyman that the whole right-wing conservative make him out to be, then it's then the Kiwi is relatively cheap, but that's a big if. And Kiwis enjoyed a lot of support for a long time. Aussie Kiwi is still very low historically. 112 is at the low end of the range, between 105 and 130. And I'm open-minded. I can change my view on pairs. Give me a 2-week rally on the Kiwi, I have to. But no, it's I think you're going to make more money selling it on rallies than buying dips. To me, the biggest uncertainty is what the euro does next in the market. That's the biggest enigma. Like, I really, if you put a gun to my head, I don't know what I'd pick. Heart says long, gut says short. But I've been long euro for a long time, looking to buy the euro for the whole reflation trade. But that looks like it's a 2018, second half of 2018 trade now. So you've got to be patient. Got to be patient. And the US stock market, Jesus, it's just out of control. And Trump's ability to get away with everything is just, it really confounds me how to make expectations based upon what's happening in the world right now, when what's happened in the last 2 years, Brexit, Trump, is just so out of my model. So I mean, anything can happen. But I really wouldn't be surprised if the euro fell much lower, mainly because everyone's long, and that bullishness can be taken out first, and then we can rebuild longs from much better levels, which supports the euro going, so the Aussie dollar going lower, dollar CAD going higher, Kiwi going lower, and dollar yen going higher, sort of story in the short term. You can imagine if they do make progress on the tax, that's going to be a big deal. And it's going to be hard to stop, because it actually brings forward, the tax is not just a tax plan, it's not just repatriation of foreign earnings, it's about the Fed. If you get a tax plan that's highly stimulatory, which is 20% corporate tax rate is, then the Fed is sort of, the market's not priced the same as the Fed. So if the market starts to price in more and more rate hikes, then from the US, that's really, really hawkish short term for the US dollar. And we got to play US dollar bulls, regardless of what we think about Trump or the stock market. Alright guys, so let's keep an eye on everything. It's a pretty fluid market. It's a pretty bombastic market. It's pretty out there. It's we'll be talking about this probably in a couple of years. Remember that time that Trump got in and stocks rallied for 8 months straight? Never tell me that stocks can't do that again. RSI, what is the RSI now? RSI should be down because stocks fell for the first time yesterday. Yeah, Jesus. 1 day of selling it does that. Okay. A bit more tempered. But I'm not buying Aussie yet, not buying Euro yet, not buying, not looking to sell dollar yen yet. So no reason to fight the market. We'll be back tomorrow. We'll have a look at the GDP numbers and the CPI numbers that come out. We'll then do a preview of the Bank of Canada, and the day after we'll do the probably live trading of the ECB, which could be a bit of a special event, which you might find about soon for me. Alright guys, best of luck with your trades. Trade safe. If you want me to look at particular pairs tomorrow or the next day, just send me a little PM and we'll go over whatever you're looking at crosswise.